Welcome everybody to the Chinchilla Picking Podcast. It is September the 21st, 2025 at 4:06 p.m. Welcome to the first day of fall. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
Good. How about yourself?
I am doing fantastic, man. It is the first day of fall. It's time to get your pumpkin spice latte out. It's time to go Halloween costume shopping, schedule your Halloween party lined up. How many stops are we having to get together at your house, man, or what's up?
No.
I knew the answers
Uh,
was no. Like you don't do social events at all, but like
no.
thought I would put that out
Never.
there. We can do one at your house. You want to do one? Yeah, let's have a little get together at Brandon's house.
No.
I'll post his address and date and time for everybody to see all over social media.
I will move and burn down my house in the
You
process.
probably would. You probably would. Seriously though, it is the first day of fall. We are had a lot of stuff happen this past week. A lot of big news. Brandon did not tell me what he was going to talk about, which so I don't know if I'm because I'm just going to give a quick highlight of the news of the week. I don't know if I'm going to hit on your topics or not. I have no clue what you're going to talk about.
No, you're not. And there's no way you
Okay.
can guess it.
All
I
right.
don't think.
Good. Jerome Powell had some comments this past week, and the Fed did lower the interest rate by 25 basis points, which was lower than what the street was wanting. Now I was gonna say expecting, but they were only expecting 25. They were wanting 50, and I think that was bad news all around for the street. They were looking for that 50 basis points, but Jerome Powell was out there and he was there was a slight concern about stagflation. After Wednesday, Brandon, on CNBC, Bloomberg, Cheddar, everywhere I looked, all I heard from the talking heads was stagflation, stagflation, stagflation. And I was like, guys, there is no stagflation going to happen that I see. I don't see the data to show it.
I mean, I don't either at this point, but if it does, it's just something that we're going to handle. Um, we talk about this market news because it's what everybody else is talking about. So we report on it too,
Right?
right?
Yeah.
It has zero effect on the stocks that I pick. Except for
Yes.
one example, which I'm going to give in my talking, in what I'm going to talk about, which made sense. But
But I don't think it has zero effect on all stocks, but on a majority of what I'm invested in, it doesn't have much of an effect at all.
so it's not that it has zero effect on stocks; it has zero effect on my thesis.
Okay.
So, and then also stock picking in the sense that if you've got a good company with a fortress balance sheet and a good business plan with a good product, the trajectory of that stock is going to continue to be higher over the long term, despite whatever interest rates the Federal Reserve is pushing through.
There you go.
And those kind of companies will figure out ways to get around the headwinds or to work with them as best as they possibly can. And
Okay.
those are the kind of companies that you want in your portfolio regardless.
Gotcha. All right. Well, fair enough. There was that news. There was other news. There was a lot of good. I watched a number of CEO interviews this week, even though I was out of town. That's why we did not record a podcast last week. If you're wondering why, hey, David did it by himself for a quick 10-minute and then all of a sudden nothing last week. What's going on, guys? Well, I was out of town. I was over 2,000 miles away from where I'm currently at right now. I was in the great state of Oregon, out in the middle of nowhere, enjoying the mountains and the beautiful scenery on rivers and lakes. And Brandon told me I need to be posting you guys pictures of where I go all the time because it is gorgeous views everywhere I
Yeah.
go. And they are, they really are. But yeah, and Brandon wasn't feeling well, so that's the reason why there was no podcast. We were going to have guest speaker Nicholas Young on, and yeah, there you go.
Yeah, we need to build up a community a little bit more and be a little bit more interactive. You're the more personable person out of the two of us.
I
You're the most accessible person,
I
and you're
try
the
to
one
be.
that
I
people
try to be.
reach out to because of that. So you need to
Yeah.
start posting to the Instagram of the Chinchilla picking
Oh
account.
man. doing social media. You know how much I hate doing social media too. I really do. It's just, ugh, why do I got to do this? But it is I do need to do like I'll do a couple posts this week. It is a necessary part. It's just that I want everybody to come to the podcast because here's where we dive into the information and we kind of dig into it and we ask questions back and forth and
Right.
you get the better answers. Then a
Right.
quick 1 minute video is not going to cover what you need to cover in order to understand a certain stock. Even if you're doing a quick overview, I can't do it in 1 minute.
Right.
I need a couple minutes to kind of, even if I'm just doing a quick overview, I need like at least 3 minutes to give you all the information for a quick overview of what I want to cover, just so you know the basics. And so, that's why I want to drive people to the podcast because here's where we give you that information. Here's where even if we're doing a quick article, quick thought, it still takes a few minutes to discuss what we need to discuss. But
We have a lot of red meat on this show, which I like. I like that.
yeah,
We're not sound bites.
we're not.
We're in depth.
We are in depth, right? We are in depth. I did enjoy that. I was watching live TV on the plane back though. I was caught my Husker game. That was fun. So I was cheering as we were going up, then down, then down, then tide,
Yeah.
then down, then tide.
But
The whole
you know
game.
what
It
I
was great.
like about this show, though? Because
What's
when I
that?
was new to the investing world, I used to, wonder to myself, what do successful people who are successful in the stock market, what are they looking for? And then if you would listen to the media, it's all kinds of different conflicting messages. And,
Right?
one person is saying the opposite of another person, and it's all kind of overblown, ratings driven BS.
Yes.
And I wanted this podcast to be more focused on what are people actually looking at in the stock market and in the companies that they invest in. And I think we do a good job of that.
We try. We try.
Yeah.
How about we get into it then?
Sure.
Let's just do that. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. Here to lie back and forth, to bicker and the banter right here on the show for you. Now, I did tell Brandon what I was going to talk about, but he wanted to keep a surprise. So I have no idea what Brandon's about to say. Brandon, take it away.
All right. I guess I'm taking it away. One of I got two quick things I want to get into, and then I want a red meat subject that I want to dive
Gotcha.
into.
Go ahead.
Um, we were all talking about artificial intelligence taking people's jobs, and one of the industries that it's really hitting at right now is one that I did not expect, and that's financials. 18% of CFOs have eliminated finance jobs due to AI implementation. The majority of them are saying that accounting and controller roles were cut.
I mean, it makes sense. You could just have a robot do it, but
Yep, absolutely.
the problem I have with that is that you're putting too much into AI too quickly. I
I think
would
some people
say,
might be, but also I think that the crazy thing about AI is how quickly it is
yeah,
evolving
yeah,
at the same time.
but for the sake of those of investors, is the reason why I say my next statement. I would do it as a like how Tesla is rolling out its autonomous vehicles, like for trucks,
Right,
right? They have a driver at the wheel, but the truck's doing all the work.
right,
I would say keep your controller for at least 6 months to a year while AI does the driving. And literally, yes, they have the easiest job in the world. They just sit there and watch. But I think everybody would feel more secure as an investor if you did it that way. I don't know.
right.
Maybe I'm too cautious. Maybe I'm at that age where I'm becoming too cautious with this type of change.
Maybe. Amazon has said that they're using artificial intelligence for generating internal finance reports. And they said about a year ago is when they started really playing with us. And a year ago, they had to double triple check everything because a lot of the answers were coming back wrong. And he said, the person that they were talking to, I can't remember if it was a CFO or CEO. I wish I would have put that in my notes. I don't remember. But anyways, um, he said a year ago they would have to triple check everything. And then this year they're kind of just double checking it and it's all right. It's all exact
So
where they
they
want
are
it to
doing
be.
the Tesla driver approach type
Right,
situation.
right.
Gotcha.
So, I mean, we're moving in this direction. I remember when we first started with the AI boom on this podcast, and I was like way cautious about it, saying,
You were
I don't
very
see what
cautious.
I don't see where this is making any money. Who cares about an AI chatbot?
Yeah.
And now, like, this is all revenue positive now for a lot of companies. A lot of companies like Google and AWS are seeing drive profitability in things like Google Cloud now.
Well, the
And
AI chatbots give them data. It gives them that interaction with human beings, and they use that interaction, and the AI will learn and grow on its own. So it uses each interaction to kind of learn and grow on how to be better suited for people.
okay, so we're gonna now transition into the big topic that I had. I'll save the small topic for my final thought, actually. This is a great
Okay.
transition because I started hearing some whispers in the media last week about another great rotation out of tech stocks and into financials and into value
I did
stocks.
too. I heard
Yeah.
that too. Yeah, yeah.
So what I did is I used Google's Gemini
Okay.
to track down these so-called great rotations that CNBC and Bloomberg and everybody were talking about
Yeah.
and give me a couple of different instances. Actually, I think there's five here. I didn't count them, but instances of where the market or the media in the market was saying this is a great rotation. Everybody's moving out of tech stocks and the value stocks and the financials are going to be the next bull leaders. And I said, track this down. Give me a 6 month performance of the S&P 500 and the Nasdaq from when they started saying this to 6 months out, and then a year out. And then I also asked for when the peak fear was, and then what the performance for a year out of that was. Because I
Okay.
wanted to see, like, okay, if somebody started hearing on CNBC, this is a great rotation. Start looking at the value stocks and the financials, and then start selling your tech stocks. What benefit does that have? I wanted to see if there's any benefit to this at all.
So here's my pushback on this theory, because I heard this too, is that the financials have had a big run up this year because they've done tremendous with high interest rates, and with also their trading revenue has gone up quite a bit as well. They've had all the big investment banks have had over a 10% jump in trading revenue for Q1 and Q2 so far this year. They've all had banner years already, and they've already all moved up. Most of them have moved up their stock prices well for the whole year. So I don't see much more movement in. fact, I see still more value in tech than I do in financials right now. I see financials as fairly valued for the most part. There are some opportunities, yes, that I've been looking at, but for most of the big financial banks, and by big, I'm talking, Brandon, let me specify, like Bank of America, Goldman Sachs, State Street, Vanguard, all the big ones. I see them as fairly valued for most of them, and
Okay.
I maybe regional banks might be what they're talking about, like a PNC, a Key Bank, something like that. First Bank Corp. I don't know.
So the question or the question that I was trying to get to is would it benefit the average CNBC listener or Bloomberg listener, watcher, whatever, to sell the tech stocks when the media was telling you to sell the tech
Yeah, and
stocks?
my point was like I don't see the data for it. So no, my answer is
Yeah,
no
no,
because I don't see the
it
data for it.
doesn't. And in fact, you're going to miss massive opportunities. So I want to
Yeah.
go over what this identified because this all came from Gemini. It back tested everything in about the course of 5 minutes. Did all this research for me, and I read it, and I agree with all of it. So uh,
Really? Okay,
yeah.
let's hear it.
So,
Let's
so
hear
the
what
first
Gemini has to say.
the first instance of and I asked to do the past 10 years. I asked to look at the past 10 years. Give me a second. I have to plug in my laptop. Hold
You're
on.
not even ready? We're doing a
Yes,
podcast.
I'm
We're
not
like
ready.
live on the podcast, and
And
Brandon
I'm
has to
plugging this
plug
in.
stuff in. What is going on, buddy?
Yeah,
Like
my
you've
volume.
got to be more on top of it than that. I need you to be here, man.
It's all good. Give me a
I
second.
need you to be. Wow, look at it. There's his clothes.
Yeah. All right, we're good. We're good now.
His camera's moving. If you're listening, his camera was moving. I'm seeing like pans of the whole room
All right.
here.
So the first instance here that it identified in the past 10 years of the media saying the great rotation,
Okay,
talking about a rotation out of tech stocks into value and into financials. They call
gotcha,
this the Red October correction. This was when Jerome Powell first started increasing interest rates in 2018. And the coinciding with that was when Donald Trump started clamping down on China.
gotcha.
Um, so we had an 800 point plunge in the Dow Jones Industrial Average there. So people did actually cycle out of tech and into to financials. The question is, what should you have done while they were doing that? And the answer to that is buying the oversold NASDAQ and high flying Magnificent Seven, or what we called FANG back then.
Yep,
That's your answer. So the sell off was triggered by investor anxiety over rising interest rates, compounding the fears with trade tensions with China. So the 1 year performance of the NASDAQ 500 from the start of the fear to the end of the fear there was negative 0.58%. So there was a negative correlation there, and the S&P 500 was up 0.54%. So they were up. But if you would have bought during the peaks of the fear, you would have made money on the rise back up. Um, Post vaccine great rotation 2020, 2021. They call this Pfizer Monday because this is when Pfizer was able to get their vaccine out onto the market. And people were saying, okay, work from home trade is over. The tech bubble that existed during the stay at home days is over. We're not going to have that. It's not going to continue going higher. Uh, Cycle out of your Metas and your Googles now and buy your retailers and your industrials. And some of that would have maybe, generated good results if you would have bought good companies here. But your 1 year performance on the NASDAQ from when they first started saying that we're having a great rotation to 1 year out, 33.94%. The S&P 500 was 32% 1 year performance. So you would have missed out on all of that. Now, here's my favorite one. This is the inflation driven route. And the reason it's my favorite, long term listeners will know this. Me and Dave called this accurately. We said this was going to happen. We said start positioning yourself now, moving out of the high flying tech stocks. And we gave you like a year on this,
yeah,
where we said tech stocks are going to underperform.
yep,
Start positioning for that. And then once the tech stocks started underperforming, what did we say? We said start buying them.
yes.
And it just so happens that coincided with the peak fear of CNBC and Bloomberg. When they were telling you sell, 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 that's when we started screaming buy, buy, buy.
Right. Like
Um,
earlier this year when I was getting angry at the CNBC guy saying, "Don't buy stocks."
right.
I still
Right.
get irritated with
Now
that.
the funny thing is here is if you look at the 1 year performance from the start of when they started saying rotate out to the for the Nasdaq and the S&P 500, they were actually correct about this one. This is the one out of four that they were right about. And at 1 year performance for Nasdaq there was 30 negative 32%. 1 year performance of the S&P 500 was negative 20.56%. Now the crazy thing about this one, this is where almost all of my unrealized gains that I have today came from. Because even though we had a negative 1 year performance in the Nasdaq and the S&P 500, I was taking all of that time to add as much of these beaten down tech stocks as I possibly could while they were screaming at you to sell, sell, sell. Their peak fear was actually when you should have bought, according to Google Gemini. So they established the start date for the narrative of the Great Recession as of February for that year, I believe.
When other people are
And
having garage sales, it's a good time to go in there and find some rare
exactly.
antiques.
Exactly. So during the peak of this fear, CNBC was saying they expect more rotation out of the tech stocks into banks and infrastructure. Um, they were just trying to price in reprice the technology sector with a new economic reality of inflation. But what they were doing is they were telling you to sell when you should have bought. This is like a lagging indicator. And the reason why I kind of wanted to bring all this stuff up now is because I don't really pay attention to the news media all that much, but I do kind of watch for headlines and such, right? And so when they use terms like the Great Rotation, my ears perk because, that's sort of like Jim Cramer crying about Meta on TV when he was in 2022 crying about it, saying everybody should sell, and he can't believe how wrong he was, and that actually turned out to be the day that you should buy the stock.
Yeah.
It's the same thing. So my ears perk, and it's like, okay, time to go value shopping in the tech sector. Anytime they say rotation, and now that I might not find anything to buy, but it's my lead, so to speak. People have sales leads at work where they're like, okay, I should follow up with this customer, that customer. This is where I'm like, okay, I should follow up with my portfolio and start searching for some good stuff to buy. Now, in 2024, at the beginning of this 2024 year, this is what they call the Magnificent Seven call for broadening, where CNBC started saying, and Bloomberg and the Wall Street Journal, it's not just CNBC doing it, it's the whole media that does this. And they started saying, well, the Magnificent Seven represents way too much of the market right now, so we need to start selling out of the Magnificent Seven, reducing your stakes there. And become more exposed to the value stocks and the industrials and such. Give me 1 second. Give me 1 second before you ask a question here. 1 year performance of the Nasdaq there was 38.6%. 1 year performance of the S&P 500 was 22%. So you would have missed out on great gains there if you would have taken their advice in early 2024.
So
I
I
want to
want
get
to
to my
add,
conclusion on this, but you can ask your question first.
I was going to add to this some other things to keep in mind too. And first, and the biggest thing to keep in mind during this time was the growth of retail traders. So retail trading, if people don't know, current day retail trading makes up 20 to 30% of daily volume as of right now, September of 2025. And retail trading makes up 45 to 60% of daily
Right.
option volume right now as of September 2025. It was a lot less back in the day. So the investment banks and all the big trading houses had more control over the market, so they can actually manipulate it even more. Nowadays, you got to get Jamie Dimon on TV and say, "Hey, you need to sell, sell, sell this." He does that, and then they end up a month later saying, "Oh yeah, we bought positions in that last month," while
Yes.
they were telling everybody else to sell. And he's been open that he's done this. Jim Cramer's been on video saying that he used to do it when he ran his hedge fund. All these people say they do this thing. So you really need to, yeah, listen but not listen when they talk,
Right. Right.
kind of read between the lines, if you will.
Oftentimes it's a contrarian indicator. And it's
Often,
lagging
not
because don't
always,
forget,
but yeah.
like CNBC is reporting on what's already happened. They're not
Yeah, but
reporting on what's
here's
happening.
why I give CNBC credit is they give you real-time news in the moment. They don't have a whole lot of time to spin it. They do spin it, but they don't
But
have
they
a whole
do
lot of
spin
time
it,
because,
and
huh?
it's overstated. It's overstated.
Overstated,
There's
yes.
yes, and it's ratings driven. So if
Yes.
fear gives them ratings, they
They
perpetuate
get the
fear.
sheet and they're like, how
Yes,
can I make this sound hyperbolic in any which way, shape,
right.
or form?
So
And
I
they
would
change their vernacular to hit that and make that statement.
I often tell new investors to not listen to CNBC or watch it, and
See, and
only
I tell
because
new investors to go ahead and listen to it so
yeah,
that they
but
can learn how to talk.
but they don't okay, but they don't learn right away what to listen for and how to make it helpful to them because there's all kinds of stuff that's just not helpful at all. And it'll, drive fear more than rationality. And but once you become a little bit more, you know, knowledgeable on what you're doing and what to listen for, then it can be helpful for sure. And some new investors it does, work for because maybe they won't panic as easily as somebody like me used to. And
Yeah, I remember when you used to do day trading options. I would
Yeah.
see you at at the beginning of the day, and you'd be all excited, and in the day you'd be stressing out, pulling your hair out, man.
Yeah, well, those options. Yeah, I remember that. But the thing is that like I just had somebody too over the last week ask me if they should buy Intel stock because of all the media
Yes.
surrounding the US government buying Intel and the Nvidia buying, taking a 5% stake, I think they took in Intel, which surprised everybody, including me.
Well, because NVIDIA signed a deal for Intel to create its chips
Right.
to partner. They
So,
partnered.
right. I I had to say no because CNBC, I think, and a lot of financial news media was running with a story making Intel sound like it was a lot better than what it actually is. And the whole reason why Intel is in the situation where the US government has to take a stake in Intel is that Intel sucks.
Yeah, I mean, and I owned Intel last year, and I had to
Yeah,
sell it for like a barely 0.5% gain just to get out of it
right,
because it was awful.
right.
It was awful. It was poorly ran. It's still poorly ran. Like you said, the government has to go in there and save the day and own part of it. Now we've done this before. I don't
Yeah,
like it when the government does it. I would rather the government just let these things, fail, but it is what it is.
right. So here's the conclusion that Jim and I came up with as far as if you should listen when they start saying the great rotation.
Let's
And
hear
it says
this. Let's hear this conclusion.
the data is unequivocal. In 3 out of 4 identified periods, a strategy of selling technology stocks in response to the rotation narrative would have resulted in missing significant positive returns over the subsequent 6 months to a year. The 2024 event was particularly stark, as acting on this narrative would have meant foregoing a gain of over 30%. Only the 2022 event, which me and you called,
Yep.
and we called it before. We didn't call it while it was happening, like other media does. We called it before so that you would be warned of it and you
Well,
would
I mean,
know what
because
to do.
all right, so here I want to add this a little bit too. Like people are like, well, how are you and Dave, calling this before? You got to understand between Brandon and myself, I would say what do we have about 35 almost 35 years of trading
Right.
stock experience,
Right.
and then we look back historically and we review things historically and we look at numbers and data, and we've read lots and lots of books. You could fill a library with the books we've read on stock trading and videos we watch. So there's a lot of knowledge here. I know we don't sound like it or even look like it. Especially, I got a Skyrim gaming shirt on right now. So like, I know we don't look like it, but like, we got a lot of
Yeah.
knowledge here.
So, and then this goes on to say the media correctly identified that value and cyclical stocks were outperforming technology. However, the headline rotation out of tech or tech route or however else they put it implies a negative outcome for anybody who's investing in technology stocks in that period, which was patently false in all 4 occasions. Because if you
Really?
would have bought during 2022 and then waited maybe over a year, or even at the beginning of 2022, a lot of these stocks are up from that point, anyways. But if you would have bought when the media was peaking in their fear mongering, you would have made a lot of money actually in 2022, just where most of my unrealized gains come from. I put a lot in GE Vernova, GE Aerospace, Meta, both Meta and GE. I'm now more than 5 times up over my money. And I think I started those positions in 2022. Maybe GE was 2021. But anyways, I added a lot to it in 2022 if I'd started it earlier. And Meta, I think I started in 2022. So that was really the best time to buy. And yes, it was a sustained period of a contraction for those tech stocks, but that just gave you more time to buy up
Right.
quality companies that have been beaten down. Also, Gemini tells me it appears as if this great rotation narrative, given how much it's used, is just a news template that media companies can apply anytime large companies are rebalancing, which is what's essentially happening in these occasions. They're driving the tech stocks down because they're selling their gainers and they're buying their more beaten up stocks. And
And
it's a
they
rotation that usually happens about like 2 or 3 weeks, maybe a month. Sometimes it goes longer, like these 4 did,
and
but
they got to
oftentimes
push
not.
the narrative. they got to push the narrative on all these channels because 20 to 30% of the market is made up by retail traders who they don't control.
Right.
And so now they got to really push these narratives on the
Right.
all these channels and across social media. Come on, 'cause you got to think like, do you not believe that Goldman Sachs probably has a group of people that all they do is post on stock tweets or
Right.
post on
So
Instagram? Come on
here's
now,
the
they
crazy
got a
thing.
group of people. That's what they do.
So here's the crazy thing about this. This report took me about a half hour to put together to find out. We do this stock program as our, kind of a part-time gig, right? Where we do it once every week. These people on
And we love
CNBC
what
are
we do,
doing
by the
this,
way. We love what we do, but if you want to give us a
right.
million dollars, feel free.
No, but these other reporters are doing this every day, and then in some
Right?
cases 20, 30 years. They know what they're doing. This
Yeah.
information is available to them as well, and I'm sure they already knew it.
And they have a staff that can do all the research for them.
Right,
This is just Brandon and I doing this research here on our own.
right. So they know what they're doing. They know what they're doing. So not only did Google's Gemini indirectly call these other media outlets liars, but it also called them lazy.
And it drives me nuts because I get so frustrated with these individuals who go out there and spread these lies or mistruths or half truths or maybe they're just being a little deceitful or trying to lead you down the wrong way because there are people who actually take their savings and invest based off of that. And
Right.
that's what irritates me. I don't care if you want to
So
do that. That's your choice. But don't lead people down the wrong path and have them lose money because of it, because they worked hard for that.
right. So you know what's happening here, right? So if when peak fear is coinciding with the bottom of the market, that means that these big companies, these big investment companies, are buying at the bottom because that's what created the bottom in the first place. So the fear drove it down to a price that they wanted to buy back in at.
Yep.
And then they bought it back in, and that's why you've got the incredible gains that are made from there on out.
That's where you get that, 10% jump in trading revenue
Right.
in Q1
Right.
because of all the tariff concerns that they were pushing. Oh, we're worried about tariffs, we're worried about tariffs, we're worried about tariffs. Who was the biggest buyer during that whole time? Investment banks.
Yeah.
Investment banks buying, buying, buying as they're going on TV telling you not to buy stocks.
Right.
Don't get me on that
So
soapbox again
so
because
it
I'm
doesn't
irritated.
mean like if you start hearing things like the rotation or tech route or tech plunging or anything like that, doesn't necessarily mean that you have to go in and start buying the stocks. That's just your signal to go in and start looking and maybe look a little harder than what you